So joining our series as part of this episode is prominent company director and advisor Tony Howarth AO. Tony, you've had an extensive 5-decade plus career in corporate Australia. I look forward to unpacking some of your knowledge, but I thought we'd begin with your background. As I understand it, you grew up in Bathurst. Tell us a little bit about your background in Bathurst and your decision to leave school in Year 10 to pursue other ventures.
I grew up in Bathurst. I suppose a short-potted version was I was more interested in sport than study, and had a pretty good sporting career until sort of my early teens, where I had an accident and lost an eye. So you don't really reflect on those sorts of things until much later in life. But I think that sent me off in a couple of different directions. Firstly, I needed to find something to do other than sport, so I learnt to play guitar and played in a band. So I have a bit of a musical background as well, and music's come with me all my life. I suppose I was a bit lost after that, and I can remember in Year 10, at the end of Year 10, my dad came home and said that he'd been playing bowls with the local bank manager, and obviously he'd won the game. So could I report down to the bank next week? Which I did. That was the Rural Bank of New South Wales, and I spent about 24 years in that organisation, which changed its name on the way through to State Bank of New South Wales. I spent 3 years in Bathurst branch, but then, like a lot of young country kids, felt a need to go to the big smoke. So with a few mates, we went down to Sydney, and I stayed with the bank. Worked at King's Cross branch, great eye-opener. And then was sent down to a branch in the city, which was a more commercial branch, and just met some fantastic people who, for reasons that I don't quite understand, saw something in me and decided to mentor me. I went back to study, did accounting, and then ended up in what was called, basically became the business bank and corporate bank, and then international bank. And I suppose in those years, through to my mid-30s, I just had a rush of experiences from the bank. Obviously, through corporate life, it was a whole different opportunity shown to me, although I was on the debt side of the balance sheet rather than the equity side of the balance sheet. But they invested in me, sent me to the US for more education, spent some time in the London branch, spent some time in the New York branch, was seconded to a joint venture which the bank had with a German-based bank. It was a consortium bank, and spent some time in Hamburg with them. And then when I got back to Sydney, we were having a bit of a fight with a building society called State Building Society, and we were looking to merge it into the State Bank. I was given the job of removing the managing director and becoming managing director myself. So it was a real leadership role as well, which I suppose really set me up from a career point of view to do the things I've done. On the family side, I met a wonderful woman, married, had 2 kids, and she was enormously supportive in having a husband that was sort of coming and going all the time. So we still do have a wonderful relationship.
So from Bathurst to Sydney, then to London, New York, and a period in Hamburg, I think that would have been around about the 80s, if my maths is correct.
Early 80s.
Tell us about some of those experiences working in finance and banking during the roaring 80s.
Well, I suppose the one that I remember quite strongly is we did a deal with Alan Bond while I was in London, and it was a lot of fun in a way, in that we sort of worked at 24 hours because we had a team back in Perth and a team in London. It was working with them when Bond Corp was looking to acquire Arnott's Biscuits. So we also worked with the Nabisco. I worked with the Nabisco team in New York, and Nabisco went on to be quite famous. I think the book Barbarians at the Gate was written off the Nabisco. So I actually got a chance to work with the Nabisco guys quite closely. There were some very funny times during that. The other time, I suppose, it was the first time I ever had to sack someone. Was in New York, and Nick Whitlam was the managing director at the time. He'd organised to have people go to the Sydney Dance Company who were in New York at the time, and there was a whole lot of invitations supposed to be sent out. The fellow in the bank, the young fellow, was supposed to actually go down to the post office and post all these invitations. Unfortunately, he got tied up with his girlfriend who worked in another place down the road and left all the invitations on her desk. And he was absolutely confident that she would post them for him, but it didn't happen as quickly as what we thought, and I thought it best that he find another working experience rather than with us.
From there, I want to ask you about the opportunity that arose in 1991 to move to Western Australia and join a bank known as Challenge Bank Limited, initially I think in a Chief General Manager role, and then some months later you were appointed Chief Executive Officer of the bank. What was the genesis of the move to Perth, and how did you go about sort of rebuilding and repositioning the bank during the early 90s?
Well, the move, I'm a great believer in serendipity, and I'm also a great believer in Yogi Berra's comment, if you come to a fork in the road, take it. And for me, it was very much fork in the road with State Bank of New South Wales. I'd grown up in the bank with John O'Neill. He'd been appointed managing director. He and I were the same age. I wasn't going to go much further. So it was just a serendipitous call from another fellow who I'd met in the bank who did some advisory work with us. Would I be interested in this role? Went over and had a look, and thought, why not? You know, the bank was in a bit of trouble. All the banks were in a bit of trouble after the 80s. So it was a real opportunity. I felt that I'd had enough experience to have a go, and because it was a building society that converted to a bank, sort of my experience of being both in savings banks, retail banks, building societies, on the corporate side, gave me, you know, sort of a bit of the skill base to do it. Interestingly enough, I'd never worked in a public company. I'd always worked in a state government bank. So the biggest eye-opener for me was that it was a public company. And again, fortunately, I had some terrific people, including the guy who became chairman of the bank, Neil Hamilton, to help guide me through and educate me through that. Not just running a bank, I thought I knew fairly well, but running a public company was a whole different exercise. So in '91, we went over there, and we were going there for 3 to 5 years. And here, what is now 35 years later, we're still there and loving it.
I want to ask you about the banking landscape in the 90s. How did you see the evolution of banks in terms of the industry consolidation and in terms of the eventual sort of dominance of the big four that we've seen over the last 10 or 20 years?
Well, we became a challenge quite active because we had a challenge in Perth in that we had two local banks. There's the Rural and Industries Bank, which became Bank West, and ourselves. We were publicly listed. They weren't going to stay in government ownership. So we tried pretty hard to affect the merger, and that also brought us in contact with some of the other regional banks as to what that might mean if we could do that in Western Australia and put it together. Were there opportunities for those regional banks in the other states to do something? And maybe if we all were able to do something and build ourselves around the country, we could all come together and be another force equivalent to the big four. That played out over a year or so, and it became pretty obvious to us Bank West was never going to deal with us. We had a change of government, which sort of also made life a lot more difficult to be able to do that. But through all of this, we'd pretty much put Challenge Bank in play. And it was Westpac that came out, made an absolutely compelling offer, and acquired the bank in 1995, 96. Yeah, so I stayed on with Westpac, did the merger. Thought a couple of times about coming back over east, but we just fallen in love with Western Australia.
So Westpac comes along and acquires Challenge Bank Limited in 1995. Then I read that you were involved in the private equity takeover of Alinta Energy. Tell us about that.
Okay, well, probably the private equity was a later issue. I joined the board of Alinta when it was still in government ownership. The government had split Western Power into two businesses, a gas business and an electricity business. And Alinta was the gas business, and it was decided that they would privatise that business. And again, serendipitous moment. I hadn't specifically headed off in any one of these directions. I did know that chief executive jobs in finance industry in Western Australia were pretty rare. So I needed to open my mind about what the next lot of opportunities were. And I was walking down the road after a lunch with the fellow who was then the managing director of Alinta, and he was telling me about how it was going to be privatised, and they needed to restructure their board, and they needed somebody on the board with a bit of public company experience and things like that. They're going to change it around. Did I know anyone? And I used to get a lot of these questions. Anyway, I went back to my office and I thought about it for a minute, and I rang him up and I said, yeah, I know someone. And he said, oh, who? He said, me. And he said, well, I didn't think you'd be available. I said, yeah, no, love to. So I landed on the Alinta board. Then prior to the privatisation and the float, became the chairman and took the company through the float. So that was my first round with Alinta. We then we had a cornerstone shareholder out of the US, a company called Utilico. They paid a premium of about 40% to get their cornerstone shareholding. They were a company with deep energy knowledge. We needed to change the management around and really set a strategy. So the easiest thing for us to do was to go over and talk to them and say, well, you did your numbers. You got it that you could pay this amount for it. Our first task is at least to take the share price to that level. Tell us all you know, and we'll implement it. And we also got a fellow out of Utility Corp called Bob Browning, who became our managing director. And for me, through to, I suppose, about 2006, I had a great time being chairman of Alinta, and the business grew quite rapidly. Then Bob had told me that he wanted to go back to the US. So I felt, well, I've been on the board about, coming on 8-10 years, probably long enough. What I should do is maybe me step off, get a new chairman, then when Bob goes, the new chairman and the board can appoint the new managing director. Seemed like a good plan at the time. So I leave, and then about a year later, I hear that that there's going to be a management buyout of Alinta. So anyway, I had some strong discussions with a few people. Anyway, in a way, it was okay for shareholders. Shareholders got a really good price for it. If you rolled your stock into the Babcock and Brown offer, then that didn't turn out so well in the end. But that I always say, if you sell your house, you can't complain that somebody's painted it a different colour. So I'd left. I was gone, doing other things, and it was in. So the old Alinta got split up by Babcock's into various funds, but the end result for Alinta was that it fell on really hard times, was caught up by the banks, and then I got a phone call out of the blue from TPG, the TPG guys, saying They were going to do a turnaround on Alinta, group of banks, group of private equity funds, wanted some independence on the board, and approached myself, Mark Johnson, who was the former chair of AGL, and Wayne Osborne, who was the former CEO of Alcoa, to come and join the board as independents. And again, that's now probably about 14 years ago. When Mark retired, I came back as chairman. So this is my second run as chairman of Alinta.
Throughout the early to mid part of the 2000s, alongside your role at Alinta, you also held a number of other roles that I want to explore. You served as non-executive director and deputy chair of the Bank of Queensland, as well as non-executive director and chair of St John of God Healthcare. Take us inside both of those roles, if you could, and perhaps some of the experiences that you had.
Yeah, well, as I was winding down from Westpac, and once we'd put Challenge Bank and Westpac together, it was then operating under the Westpac group management structure. And my role was getting less and less in the sense that I still looked after the Western Australian business, but there were direct reports back into the various parts of Westpac, and that was the way that David Morgan wanted to run it. So there was a point of time when I said to David, look, I can't sleep straight in bed and take your money. Let's set up a pathway where I can maybe at the end of the day transition off, but certainly just get paid for what I'm doing over there. And that lasted for a couple of years, and during that time, I got very busy with other non-executive roles. I was being approached at that stage by the chairman of a company called Home Building Society to join the board of that, and then so once I finally stepped down with Westpac, I went on the Home Building Society board and became chairman of Home Building Society, and it was a listed financial institution out of Perth as well. We looked at doing some M&A through there. We acquired another credit union called State West Credit, which was Energy Credit, and then we were looking at doing a couple of others, and Bank of Queensland, who was then being run by David Liddy, who I knew from my Westpac days. While I was running Western Australia, he was running New South Wales. He again made a compelling offer for Home Building Society, and was keen for me to join the board of Bank of Queensland, and then was keen for me to join the board of Bank of Queensland. And I felt I had a bit of an obligation to the people in Home Building Society to make sure that all that transition went well. So went on the Bank of Queensland board and became deputy chairman there, and I was my plan was hopefully that Bank of Queensland could also get involved in some M&A and really be able to grow the business. But the GFC hit, and then going back and forwards from Perth to Brisbane wasn't an attractive proposition with not much going to happen. So I stepped off the Bank of Queensland board then, and I suppose the beauty of that exercise was while I was Home Building Society, I met a guy called Craig Coleman, who was working with ANZ at the time, was a Perth boy, and was keen to come back to Perth. So he became CEO of Home Building Society, and again worked with us through the whole M&A with Home Building Society. Then when that all finished, Craig and I still stayed doing things together, and really that's how Viburnum started to get created. So Craig and I still work together today through Viburnum. Since I'd come to Perth, I was raised, I went to a Catholic school. My parents were Catholic. I was very much brought up in the Catholic tradition. And when I came to Perth, I put our kids into a Catholic school, and through that got a little bit involved with the church in Perth. I was asked to go and sit on the Archbishop's Finance Committee, which I did, and then religious bodies are a bit like universities. Once they get their claws into you, it's very hard to get off. So I was then approached to join the St John of God Healthcare Board, which I did, and I just focused my Catholic activities through to that, and then became chairman, and stayed on that board for about 15 years. 13 years of it, I was chairman of St John's, and it's just a fabulous organisation. I also was chairman of Catholic Health Australia during that period, and trying to get all the leaders of the major Catholic health organisations to be able to talk together, and that's both on the health side and on the aged care side as well. And that's another fascinating industry that I was able to get some exposure to, which was really good. And St John's went on to we grew the business quite substantially during that period, and was able to effect a transition from the leadership of the sisters through to lay leadership, and now that organisation is predominantly all lay leadership, with still wonderful support from the sisters, who are unfortunately getting older and older.
You were also on the board of WesFarmers for some 12 years during 2007 up to 2019, obviously a period of significant change in retail and in the business itself with its expansion. Take us through what it's like sitting on a board of a business of that size.
Yeah, well, again, I've been fortunate throughout my career to work with some wonderful companies and some wonderful people, and I think, again, that's the secret of life. At the end of the day, surround yourself with terrific people. I came on the WesFarmers board. I knew a lot of the WesFarmers people, obviously, both from in management and also at the board level, and I was really, I suppose, overwhelmed in a way to be asked to join the WesFarmers board. It's the closest thing you get to a peerage, I think, in Western Australia. But I joined just at the time they were doing the Coles transaction, so that was really interesting to go through. And the stock price had been beaten up. Did a major capital raise at a very discounted price, but through that, the way the organisation was piloted through that was just absolutely fantastic, and I believe quite strongly it was a great deal for WesFarmers and WesFarmers shareholders. But the best way I could describe WesFarmers, I suppose, is it's sort of like a private equity company, but in a publicly listed shell. They talk about it as a conglomerate, which it really is. The board very much operates at a very high level in terms of capital allocation and making sure they've got the right people to do the job, and it's very financially driven. It's very long term in its thinking, and it is not bound by any industry. It'll work across all sorts of industry. You see it now. It made a big move into retail with the Coles acquisition, but it already been done a wonderful job with Bunnings even at that period of time. Always had a chemicals business, was always strong engineering company, was in mining at that stage, which happened to be coal mining, but during my time we've moved out of that and into lithium and other spaces, and it is really, it sort of acts a little bit more like a private equity company. Very much empowers its companies to get on and execute on their plans. And it was a fabulous time in my career. And again, I learnt so much during that, and just again met so many terrific people who have, you just feel that having worked for a company like WesFarmers, you're so well supported in such a large number of ways.
I want to ask you about leadership. You've been a leader of businesses, and then you've seen obviously leaders up close, particularly at WesFarmers, people like Michael Chaney and Richard Goyder and Rob Scott and others. What are the fundamentals, do you think, for effective leadership?
It's a really good question. I suppose to me, it all comes back to the basics. Like, you know, if you're going to build a house, you've got to have good foundations, and the foundations lie in the people. And you know, it's the old story. Good things happen to good people, but I think, you know, the basis of integrity, being able to be collegiate, work with people. Don't ask people to do what you're not prepared to do yourself. I have a saying: before all else fails, tell the truth, because all else fails. And the older you get, the harder it is to remember what you said. But you know, it's a mixture as well. You want people to be confident. You want to work with smart people. And I think you can teach smart people skills. You always hire on attitude. You know, you want people who really want to make a difference. Everybody's got to have a bit of ego, but it's got to be kept in check. There's a lot of self-interest in, you know, you want people that have some level of self-interest. Without self-interest, there is no interest. So it's a real combination. You know, there's a lot of academic papers written on what are the characteristics of good leaders. But good leaders are sharers. Good leaders take people with them. Good leaders are happy to see other people get the reward and the benefit and the success. And you really are. Your job is really to bring people with you, and recognise that you don't have all the answers. In fact, you might not have many of them, but if you can surround yourself with good enough people, the answers will come. And don't be afraid to fail. You know, someone said to me very early in my career, and he used the analogy, you know, of a batting average. He said, you know, you to be a good leader, people put you in a job because they're confident that you can do the job. You should share in that confidence, and recognise that because you know what you need to do and you know the job, the decisions, you'll make 80% of the decisions correctly. 10% of the decisions may not be that good, but if you're on top of your job, you'll know those 10%. You probably know them before other people will. 10% of decisions you'll get wrong, but as long as you're not punting the company on those decisions, you know, you're careful and you're a good steward, people will work with you to turn those decisions around. But it's the old Yogi Berra thing. You come to a fork in the road, take it. You've got to choose a direction. You've got to choose a course of action. Otherwise, you'll be standing at the crossroads forever. And there's so many people I've come across during my career who are smarter than me, more educated than me, all of those sorts of things, but they're still standing at the crossroads, not prepared to take the next step. So you've got to have people who will choose a course of action, will back themselves, but are aware enough that that they're not always going to get it right, and surround yourself with people. Again, my CFO in Challenge Bank used to have a little picture on his wall, which he called the first law of holes. If you find yourself in a hole, stop digging. There's all these people around you that are ready and willing to work with you.
We spoke about Alinta Energy before, and you're a current director of the business. You sit on the board. I want to ask you about the transition to clean energy and Australia's energy infrastructure more generally. What are the key themes that you've witnessed over recent years when it comes to the energy infrastructure, but also the transition to clean energy? How are you seeing play out?
Oh, look, we have to transition, but I think there's a lot of rhetoric around the pace at which will happen, which I don't share the optimism in. I certainly share the optimism is in we will have a managed transition, but I think there's a lot of overselling it for lots of reasons. Sometimes it's political reasons. Sometimes it's companies trying to position themselves in it. At Alinta, we try to deal with the what's possible. The first thing is we want to run our own business as best as we can possibly run it. It's the old foundations. You're not going to do anything else if you're not running your own business properly. So we want to run our business excellently, and then we'll look for opportunities. So we've done batteries, we've done solar farms, we've done wind farms. We look for who's the best owner as well, and who are the best partners to work with. We recently sold the Pilbara assets, and up there we've done some. When we did the private equity turnaround, we ended up with a power station at gas-fired power station at Newman, and one at Port Hedland. We then went on and built some transmission lines into the iron ore areas. We did energy supplies with FMG, with Roy Hill, with BHP. We put in solar farm, battery packs up there. We had a really good runway with more opportunity to do renewables and take. There's a lot of diesel up there, so the first thing was to take the diesel out. But it's all very capital intensive. So there were billions of dollars worth of opportunities up there, but there's billions of dollars worth of opportunities for us elsewhere, and we just felt that probably we'd set up the Pilbara as best that we thought we could. There was opportunities. People were prepared to pay for those opportunities, so it was time for us to exit that and invest in other things. So right at the moment, we're building another battery pack down in the Swiss, which is the southwest interconnect to Perth. There's big opportunities, we think, still in the Swiss. We build a wind farm up there, opportunity for another wind farm. Like everywhere, we've got to find ability to have some peaking capacity. So that's there as well. We're looking at a pumped hydro project up in northern New South Wales. We're still looking at offshore wind and some other wind assets. So there's no shortage of opportunity for us to do things. It's what's the best use of that capital and what's possible. You can get tied up for a long time in approvals and in just getting sites ready to go. So we're working on quite a few sites to get them shovel ready. So if the opportunity comes, we're there and we're ready to go. Again, we share the optimism. We probably question the timing of it.
I want to change tack and ask you about another role that you currently hold, and that is that you're on the board of Viburnum Funds, and you have been since 2007. As I understand, it's an investment manager of public and private equities for family offices, high net worth individuals, for institutional investors. Take us inside the business, if you could, and then how you've seen the investment landscape change since 2007.
Yeah, Viburnum's quite a niche operation. It was set up by Craig Coleman, Marshall Allen, and myself in conjunction with the Wiley family, and really through Craig's involvement with the Wiley family. The Wiley family is now out of the business, out of the management business altogether. It still has some funds that we look after. A lot of money that we look after comes out of the US, out of US university endowment funds and private offices. We probably do more with private offices and universities out of the US than we do in Australia, and that's another interesting pattern, because universities in Australia don't operate the same way as they do in their investment funds in the US, which is a bit. I think there's leaving a lot of opportunity on the table. But we run two different funds. One's a fund around listed companies, small to medium listed companies. It's an activist fund where we can hold a significant interest and work closely with board and management on strategy and turnaround opportunities. And the other one is a more classic private equity, but in the mining services area, which is obviously a big space for us in Western Australia. When I say mining, I mean oil and gas as well, just all those sorts of services. And we've built, again, they mainly come out of owner-operated firms built up over time, need capital. We come in, we work with them, and I've had a couple of really good exits from that as well. So yeah, so it's quite a niche operation. We run funds up to about $1 billion in that fund. Small group of people, very talented, and have been able to get some really good results.
There's also BWP Trust, the business of which you've been on the board of, I think, since 2012 and chair since 2022. What are the key trends that you've observed across the commercial property landscape with reference to your role at BWP?
Yeah, well BWP continues my involvement with the WesFarmers group. So the structure of that is that they're listed units, but the management company is a wholly owned subsidiary of WesFarmers. So, and about 80%, a little over 80% of the property in that fund are Bunnings warehouses. The balance of the property, most of them started life as Bunnings warehouses, but as Bunnings moved out, then we recreated them into homemaker centres and have a really good tenant group that sits in that. And over time, those sorts of things will move. We really didn't buy a lot of property over the last few years. We just felt that the fund was performing very well. People were in the fund for the long term. It was generating good returns. There'd been really good capital growth. So we didn't feel the need to go out and chase down yields. That's left us in a really good position now because the company's in a very strong position. It's got lots of cash. It's very lowly geared, good borrowing potential, and we think opportunities will now start to emerge as interest rates rise. The whole of the real estate investment, the REITs market has been sold off as yields have now starting to widen a bit more, some more than others. Obviously, office trusts have been hit harder. We still think that the asset quality in BWP is first class. The revenue capability of it's first class, and we just think there's lots of opportunities might re-emerge for us over the next couple of years. What we have seen probably over the last 5-10 years is a lot of individual money, and people like to own Bunnings warehouses. So anytime a Bunnings warehouse does come on the market, it's pretty well bid, and quite a few of them now just sit in family companies that like to own a Bunnings warehouse.
I want to ask you about when you look back at your corporate career, you've sat on public company boards, you still sit on one public company board, you've sat on private company boards as well. What's your take on where this has landed? How onerous are the obligations now for public company directors?
Oh, look, I do worry. Our whole basis of private enterprise was built on the limited liability company. And we've slowly dismantled the limited liability company over decades. So what's next? I know I talk to a lot of my contemporaries in the market, and not a lot of us are putting up their hand much anymore to go on public company boards. You're certainly starting to see a rise. There's been wealth creation outside of public companies, and you see a lot of that playing out now. What's the future for the public company? It'll still be around. I'm just I just worry that it'll lose its entrepreneurship in it, and it's going to be very hard to continue to attract really good people into that line of work. You know, the old story of the company director was they'd had a decade, or had a sort of a lifetime experience in business. All pretty much their financial needs have been met. They weren't sitting on public company boards to necessarily to derive an income source for themselves. There was a bit of greater good in it. I think a lot of that's changing, and lots of people are seeing non-executive roles as just another career very early on with a lot of flexibility. I think they're misunderstanding the liability that goes with that, and I think they're misunderstanding the risk. I saw something come out from Institute of Company Directors the other day, which had 6 points in being a good director, and actually making money for shareholders wasn't even in any of those 6 points. It was a byline in the next. You're there, you know, you're there to help create wealth and opportunity. You're there to work with management. I see all businesses as a team. It doesn't matter whether you're a director, whether you're the managing director, general manager, or someone, you know, sitting on a telephone doing other things. We're all the same. We all work for the same company. Our objectives are largely the same. We just happen to have different jobs. And your responsibility is to do your job well, because you are the sum of your experiences. And I think at the top level of an organisation, that sum of your experiences, you know, call it wisdom, whatever, I just call it sum of your experiences, is the asset you bring to the table. If you really haven't had those experiences, well, I'm not quite sure what the asset is you bring to the table. Now, I have a bias in all this as a decade, and people only have to look at me to see probably where my biases are. But I do believe that having been a CEO of a large business, you get more experiences. You get to be able to deal with lots and lots of people. You deal with strategy. You deal with all of the other things. And I think that's great value that you bring to the board. Yes, there are other values that you bring to the board, but I think without that, boards get a bit lacking.
You've been based in Western Australia, as we spoke about earlier, since 1991, so coming up to 35 years next year. How have you seen the business landscape in the West evolve over that time?
Oh, the West is a fantastic place. As I say, we went there for 3 to 5 years, and 35 years later, we're still there. It's a place where you can do things. There's that attitude. There's always that attitude that I can do it. I used to say that in Western Australia, you used to have to carry your own shoebox around to stand on, because it's very hard for people to hear you over in the eastern states as we talk about it. And so many times during my career where really good ideas have emerged from the West, they haven't been taken up because that's not how it's done over in the East. But I would just encourage anybody to come over and have a look. It's a really vibrant town. It certainly has a bias towards mining and oil and gas, and I think that's what makes it a doing sort of town. But it's also a very high-tech town, and if you look at some of the technology that's come out of the mining sector, whether it be from a geology point of view or automation on the mine sites, it's actually driving lots and lots of industry in different sorts sorts of industry. So no, the West is still in a good condition. It does have a bit of a boom bust cycle. So where things are going well for the nation, it's going very well in Perth. When it's a bit down, it's probably down harder in Perth. But I think we all get used to that and are pretty capable of management through that. I think the government over there has done a fantastic job through COVID. It's got some challenges now with Mark McGowan stepping down, and like all states, I think everybody's feeling the pressure of changes in leadership at states, and politics is going to be very interesting over the next few years in Australia to see how that all comes out. But at the end of the day, largely Australians just get on with it. I think we're a great country for just getting on with it.
As you know, the economic contribution from Western Australia is enormous on a national scale, particularly through mining and resources, as you said. And somebody else that I spoke to over there was bemoaning the fact that all of the superannuation money, so much of the funds management industry is in the East, but the basis of it actually comes from the West. What do you think West Australia needs to do long term to attract more investment, more capital, more funds into Perth and into West Australia more generally?
I don't think it has any problem attracting capital. I'm from the Michael Chaney school of capital. If you run your business really well, you treat your shareholders properly, you reward them, then and if you've got really good opportunities and projects, the capital will be there for you. And the beauty about the West is there will continue to be really good opportunities there, to the extent that some of this is managed out of the East Coast and internationally. If you've got the right opportunities, you sell it right, you structure it correctly, you put the right people around it, the capital will be there.
Final question: what's next for yourself? What else do you want to still achieve in your career?
Oh, that's a really good question at sort of 72. Look, I've just had a fantastic career, and I do believe in serendipity. What will come next will come next. I'm really fortunate having great family, supportive wife. We like to do lots of things together, and I suppose the objective is to be able to do more and more things together. Our runway is not getting any longer; it's getting shorter, but I'm sure we'll fill it with lots and lots of. My eldest son talks about adventure all the time, and we'll continue to try and find adventurous things to do to fill that runway in.
Tony Howarth AO, pleasure having the opportunity to share your insights. Thanks for your time.
Thanks.